I got interested in how people make decisions, how they make choices. That's what we spend an awful lot of our lives doing. Shall we go down this road? Shall we go down that road? Shall we buy this? Shall we buy that? Economic theory is a theory of how people decide what to buy, what to sell, what prices, and so forth. We're not awfully good at saying what's going to happen in the future. People who worry about the stock market aren't very good at predicting what's going to happen to it 6 hours from now. I think really the difficulty of decision-making centers very much around the degrees of uncertainty. We talk about venture capital, about putting money into new ventures. The trick there, not to choose between 100 ventures, the trick there is to find one which is going to be profitable.
Bounded rationality is a theory first coined by American economist, political scientist, and cognitive psychologist Herbert A. Simon, and he argues that most people are only partly rational and are irrational in the remaining part of their actions. Have you ever invested in a stock and then realized you have no real logical reasoning for buying in, or have even questioned why you did so in the first place? The simple answer is you may just not have had enough time to come to the perfect rational choice.
My quarrel with economics is that in a sense it is too quick to build an idealistic, unrealistic picture of the decision-making process and then prescribe on the basis of that unrealistic picture, and that it hasn't done the groundwork yet, hasn't built the groundwork of finding out how an economy actually operates, how people actually make decisions before it tries to prescribe.
Hindsight is perfect, but as retail investors, it will be difficult to be perfect when you don't control the house, the game, or the rules. You can, however, control two simple things: your investment and the time you stay invested. How you use these two things makes you either a successful investor or not. Remember, the stock market allows you to buy shares in real companies, and real companies do not go up in value or go to the moon in a day or two, or even a few weeks. The solid investments all take time. Everything that went to the moon faster than you can say,
"Hit me."
You have 17, sir.
inevitably comes right back down. If that is what you want, then perhaps a casino is what you are looking for. Real investments, especially in growth companies, takes time to mature and grow, even at exponential rates. Look at Amazon, Tesla, Apple. It's all the same. Hello, welcome back to part 3 of my 5 stocks to buy right now. As Bill Ackman once said,
"What's the single best business in the world?" I said, if you could own a royalty on people spending money, like Visa or MasterCard, it's the greatest business in the world. If that ever became a public company, you want to buy that company, or if you ever could buy that company.
Paysafe, in my opinion, has a strong shot in 5 to 10 years' time to become what MasterCard and Visa are right now. The potential I see is they could become a truly integrated company with huge market share in payments and monetary transactions. The latest earnings call was huge, and I think the current market correction, especially in the tech stocks, have casted a shadow over this. There are a lot of breadcrumbs and signs of how this company could keep growing year over year into the future. Let's discuss these and more. Stay tuned. Keep it simple. Full disclosure, I started a position in Paysafe stock all the way back in December last year when it was still trading under the SPAC ticker BFT. My first position was around the $13 range, and I've added more shares when it fell below $11 last week. Is it now the time to continue to load up the boat? No more plugging. Let's start drilling. The first quarter 2021 earnings released on the 11th of May were pretty much in line with the guidance previously set. Revenues, gross profit, adjusted EBITDA, and cost of services were all in line with the guidance and were all close to but not exceeding it. These results are not groundbreaking in Wall Street terms, but think about it this way. They set out to achieve these performance results and they delivered. In any world, that would be a strong positive sign moving forwards. Actual revenues only grew 5% year over year, and EBITDA pretty much remained at the same levels. Gross profit actually declined year over year by 2%, whereas payments processing went up by 17%. But it is well noted that the economic recovery in Europe remains slower, much slower than the US, where they claim there is still strong volume. Okay. The exciting part of the Paysafe business moving forwards for me is their e-cash platforms, which are growing exponentially with volumes up 61%, revenues up 63%, and EBITDA up 110% year over year. The forward-looking guidance on the full year 2021 is also looking very solid, with a reaffirmed 9 to 10% projected revenue growth, a gross margin improvement of around 63% and a 32% EBITDA growth. A hint of this was provided in the earnings call.
We've also worked with all the kind of Foley family of companies on the kind of transformation projects they have and specific incentives. So we've implemented a lot of pieces to follow the Bill Foley playbook. We have $30 million of repeatable cost takeout in our kind of guidance numbers for this year. That's about a $45 million exit run rate for next year, and there are several other activities that we're building in the pipe to augment that into 2022. So we do expect EBITDA margins to expand in the back half of the year, to continue that kind of a steady drumbeat going into next year as well. So it's a lot of focused activity there. Yeah, so no, we're definitely seeing, as we look at the early results for April, and even some very, very early results in May, we continue to be pleased with where the top line trends are going. We've had some actual record days in e-commerce processing, historical records, not just recovery records, but historical records. As we've expanded our e-com into some crypto trading sites, we're seeing travel come back. So we're seeing some really nice proof points across the board. E-cash continues to remain very strong, not only in terms of online adoption, but also the move to the My Paysafe app as well.
And I think we should see a potential big Q2 year over year. I believe Bill MVP Foley will need at least a year to start imprinting his DNA and strategies to turn Paysafe into a huge, highly profitable payments giant platform. Just like how he turned his previous companies around, Paysafe, in my opinion, will be an even bigger opportunity. The stock price, like the tech stocks, has taken an absolute beating. This makes hardly any logical sense to me, and it's clear when we take a look at the ridiculous volume of institutional buying in this quarter. Can you really fathom how or why the stock is trading at its current levels? All conspiracies aside, the fact is the smart money has, and I think is continuing and will continue to load the boat on Paysafe shares. Blackstone Group have gone all in with 160 million, yes, 160 million shares. Think about that. When you realize the shares outstanding are only at 723 million. Blackstone Group, ticker symbol BX, are no joke, and they have $619 billion in assets under their management. It's just insane to me, the position they have in Paysafe, which suggests their strong bullish view on the company moving forwards is for real. We need to also note that Bill MVP Foley has also put his money where his mouth is, with his buying into Paysafe under his Fidelity National Financial and his Canay Holdings, which together equate to around 100 million shares. Why is Bill MVP Foley, in my opinion, the pivotal factor or the X factor at which I first sought to invest into Paysafe.
Well, look, I remember that is Bill Foley, he's made about $100 billion for people. I thought he came on and articulated a very, very strong position. And if Bill's in there, then I think you can buy more, frankly.
As Evan Ratner, a SPAC portfolio manager at Easterly Alternatives, said, Bill Foley is going to make money. He's buying a business where he's going to own it for a long time. Bill Foley's story of turning Fidelity National Financial from a struggling company into a behemoth today is a story that will live on with legendary status. It is no fluke that he is only one of 2 SPAC executives to raise at least $1 billion on 3 separate times. Foley once said this, which sums it up for me. I've been a value investor all my life, and I'm a big fan of boring companies. To summarize, Paysafe could easily be my highest conviction stock right now based on all the fundamentals, the discounted and ridiculous stock price, the future potentials, the latest earnings, the expansion into iGaming in the US and e-commerce, and the verticals that Paysafe are dominating, or simply 2 words: Bill Foley. I see Paysafe as a triple-digit stock within 5 years. And what does that mean? That means I see it as a home run 10x stock right now. So, why is it only 3rd place on my conviction list? It's only 3rd because in Palantir and Neo, I see higher explosive short-term potential. As Foley would say, from a boring or safety perspective, Paysafe would be my number 1 stock right now. Thank you for watching, and remember, I'm extremely bullish on Paysafe stock moving forward, so please do take this video with precaution. If you are interested in WPG stocks that I have in my Freedom portfolio, please check out my other videos. If you enjoyed part 1 to 3, then stay tuned for part 4, where I'll share with you my 4th highest conviction stock right now. So please consider, just consider subscribing to my channel so you get the information first. I am The Simple Trader, and I try to keep this simple, and will simply see you next time.